So it's April 1st, 2021, and a lot of things are coming to a head. Specifically, the end of forbearance for a lot of homeowners means that they're going to have to make some decisions as to how they're going to proceed with their mortgages and what they're going to do into the future and how they're going to pay back or not pay back the amounts of money that were owed during the forbearance period. Today I'm going to focus on Fannie Mae. Fannie Mae is probably the second largest guarantor of loans in the United States behind FHA. So there's a lot of people out there who have Fannie Mae mortgages. Fannie Mae is a federally backed, Fannie Mae mortgages are federally backed, so therefore you have a lot more protections than other people who do not have federally backed mortgages. Now, at the end of forbearance, people that have Fannie Mae mortgages have one great big option, which is called a payment deferral. This is basically putting the entire amount that you owe on the back end of the mortgage. Now, one thing to understand about this, and it's written down here, this is not automatic. This is not to say that they're going to deny you, but there is a application process of sorts that you have to go through in order to get this incredible benefit. And there's one big talk that you need to understand before you have it with the bank and how to deal with this conversation, because this talk will determine if you have a successful application for a payment deferral or if something else will happen to you. My name is Diego Mendez. I'm a bankruptcy loan modification and foreclosure lawyer here in Miami, Florida. I was around in 2008 and I saw a lot of people go through a lot of different situations with their homes during the last foreclosure explosion. We're seeing something like that this time around, even though it's muted because a lot of the government assistance programs have limited the effect of the COVID-19 financial crisis, and a lot of people have been able to save their homes through forbearances. However, we're moving into a time when the forbearances are ending. I saw a lot of different people deal with a lot of situations in 2008, 2009, 2010 until the present. I've helped a lot of people with loan modifications, and I do my show, Debt Law, Survival Guide for the Desperate Debtor. It's specifically for people who are dealing with the COVID nightmare. Please subscribe and like my videos so I keep making these videos, and I keep making them every Monday and Thursday for you. So I went ahead online, I downloaded the Fannie Mae COVID-19 forbearance rules and what happens afterwards. I review these things so that you don't have to. This is actually a very complex set of rules that is very difficult to understand if you haven't seen this type of thing before. Like I said, I've dealt with a lot of these type of issues, and I've dealt with mortgage companies, and I've dealt with foreclosure, and I dealt with forbearances, and I dealt with loan modifications for many, many years. So when I'm reading this, even for me, it was difficult to understand a lot of this, but I believe that I figured it out so that you don't have to read it. So, first thing to understand is what we're talking about. We're talking about Fannie Mae and Freddie Mac. Now, Fannie Mae is like I said, probably the second largest guarantor of mortgages in the United States, and Freddie Mac is right behind it. Now, these rules, even though I looked up the Fannie Mae rules, it seems I also looked at the Freddie Mac rules, and they're pretty much the same thing. So unless there's a huge difference that I didn't see, we can say pretty much that if you have Fannie Mae or Freddie Mac, the rules apply to you. Now, what's the issue that we're talking about today? The situation is that a lot of people are in forbearance and they're coming to the end, and they're looking at what's going to happen now that the forbearance ends and what's going to happen with all that money that they owe for all those months that they didn't pay. Fannie Mae offers something called a payment deferral. A payment deferral basically is a 100% lien for all the money that you owe them during the entire forbearance period. It's 0% interest, and it's placed on the end. You don't have to pay for this until you either sell or refinance the home. You've had your 18 months or less of forbearance, and now you basically are asking the bank, okay, put all that money on the back end and let's keep going as if nothing happened. So I've done videos on whether or not this is a good idea. The link's right above me. Now, I'm not going to talk about whether this is a good idea or a bad idea. All I'm going to talk about is if you have a Fannie Mae mortgage, what can you do in this situation? What's going to happen to you when you start talking to the bank about your forbearance? The first thing to determine is whether or not you qualify. So if you are in a forbearance, then you qualify. Now the second thing is actually really interesting. I don't know how many people fall into this, But let's say for whatever reason you otherwise qualify, and at the time of when all this started in March of last year, you decided not to go on forbearance. You just said, I'm not going to pay my mortgage. If that inability to pay your mortgage was due to COVID, you still qualify for this. You just have to tell the bank that the 18 months that you didn't pay or the 12 months you didn't pay was because it was COVID related. So it's actually forbearance or hardship, which is a pretty big deal. The last thing is that it can't be over 18 months. So we're not beyond 18 months, so I don't believe anybody falls into this category. However, be very mindful of that it has to be a forbearance of less than 18 months. So I guess if you were in a forbearance before for whatever reason and now you're in a new forbearance, maybe this affects you, but this is something that you need to understand is one of the eligibility criteria. Now, one of the big differences between these Fannie Mae loans and FHA loans, which are the other big ones that have a lot of forbearance problems right now, are that in this situation, Fannie Mae requires that you had either been current when you asked for the forbearance or you were less than 60 days. So if you were less than 60 days late or you were current and now you're at the end of the forbearance, then you qualify for the payment deferral, at least up to this point. Let's say that you are in the second group that we talked about, that you never got your forbearance and you were late before more than 60 days of on March 1st, 2020, then you would not qualify because you basically you have too much delinquency and the bank doesn't think you have a COVID-related hardship, so therefore you don't qualify. But most people fit into this, so I believe that most people are okay. Now, there are conversations that you have in life that have great consequences. And I'm about to talk about one of the biggest conversations and one of the most important conversations you're going to have with your bank coming out of forbearance. I call it the big talk. So, the big talk is a conversation that the bank is required to have with you to talk about your forbearance and what you're going to do when the forbearance ends. This is a dangerous conversation, and we're going to go over some of the stuff they're going to ask you and what happens depending on how you answer certain questions. You have to talk to the bank. Everybody hates talking to the bank. Nobody wants to call up their bank and talk about their mortgage. This is probably the most painful conversation you can ever have. I understand, I get it. That's why lawyers exist. That's why people exist who talk to banks for people. However, you have to have this conversation, because if you don't have this conversation, the big thing to understand is that without the conversation about your forbearance with the bank will make determinations for you, and you do not want that. What you want is to make determinations for yourself. So it's very important that you have this talk. So let's go over some of the very simple questions that they're going to ask you at first. First, they're going to want to find out if your hardship was COVID related. Did you lose your job because of COVID? Did your company downsize? What happened in your life that caused you to ask for the forbearance? Now, they don't ask for any kind of documentation for this, but most people that ask for a COVID-related forbearance had a job loss or something happened that they were unable to pay. So they should be okay with this one. The second thing they're going to ask you is if your situation has improved. Now, we're going to talk about that in a second and how to answer that. But understand they are going to ask you if your situation has improved. So if it has, you want to say yes. If it hasn't, then I'll show you what happens when you tell them that you can't pay your mortgage. Now, the last thing they're going to ask you is, can you repay the entire amount that you owe them for the forbearance period in a lump sum or in a short repayment period? I've done videos about this, and if it's a good idea to take the lien at the end, or should you repay back what you owe if you have the money? Think about this. This is a very important question. Most people do not have 18 months or a year's worth of mortgage payments to give to the bank in a lump sum, nor do they have the ability to divide that amount of money over a year and then pay it back on top of their regular mortgage payment. So most people are going to say, no, I don't have the ability to pay back the amount that I owe you in a lump sum. So the next question is the kicker, and the thing that we need to understand how to answer. Now, they're going to ask you, can you return to making regular mortgage payments. What they're asking you is your income sufficient to pay your old mortgage payment without any extra fees or costs or anything on top of it? So if you were paying $1,500 before, can you continue making $1,500 mortgage payments after the forbearance is over if they were to give you the lien and put everything you owe at the back end and not change your mortgage payment at all? Now, this is the danger question, and I'm going to explain to you why right now. It's very important to think this through. It's very tempting to say to the bank, oh no, I can't make any more payments, and see what happens, and hopefully they'll lower it or whatever. You're going to hear a lot of people say, oh, they're going to give you a loan modification immediately. No, that's not true. That is a lie. Be very careful with playing around with this. Now, let's say that you say, yes, I'm able to make my mortgage payments and I can keep going, no problem. I have no issues. I'll keep making my $1,500 mortgage payment. This is probably the right answer. Hopefully you can answer this question in the affirmative and you can say yes. Because what happens there is, yes, they will give you your lien at the end. They will say your deferment is approved, and you will move forward with your life as if nothing happened, and you can put COVID in the rearview mirror and live your life making your $1,500 mortgage payment without problems. Now, there's two groups of people who are going to answer no. They're the ones who definitely cannot afford it, and then they're the ones who think, well, I'm going to try to game the system by telling them no, and hopefully I can get a lower payment. If you tell the bank no, that you cannot continue making your old mortgage payment, then your payment deferral request will be denied, and they will force you to apply for a loan modification. Loan modifications are voluntary, and they are an application process by the bank. That means that some people get loan modifications and some people do not. You do not automatically get a loan modification when you are in this situation. The bank will ask you to apply for loan modification. When you're in a loan modification application situation, a lot of things can happen. Sometimes good things happen to people and they get a loan modification, and then they're able to lower their payments and move on with their lives. But a lot of times they cannot. And if you're denied for the loan modification, as things stand now, then you do not qualify for the lien at the end, and therefore you will have to owe all that money, all the money that you didn't pay. They're going to want it, and then your house is going to go into foreclosure. They will default you, and you will move into a situation where you're going to lose your home. Be extremely careful when you're talking to the bank about not being able to make the loan, the old loan payments. If it's actually true, and you're in a situation that you really cannot make these payments, then that's it, because you're not going to be able to continue making the loan payments. So therefore, you're going to default. So you might as well tell the bank, yes, no, I can't. I'm sorry, no, I can't make the mortgage payments. So therefore, they're going to give you a loan modification application. Then hopefully they approve your loan modification and you get a lower payment. They will take all the money that you owe on the forbearance. They'll put it in as a balloon at the end. It's a little different process, but it ends up being the same thing. However, if you are truly unemployed and you have no ability to pay, then the bank will probably deny your loan modification. So if you're in a situation that you're at the end of the forbearance and you do not think that you're going to be able to make the loan payments and you do not qualify for loan modification, you're basically setting yourself up, or you're set up to default. So you need to figure out your financial situation now. You still have a few months left. It is time to figure out how you're going to continue making your loan payments after the end of the forbearance. You want to be able to make your old loan payments, because those people who are able to make their old loan payments at the end will get their lien at the end, and they'll be able to move forward with their lives. The people who cannot, for whatever reason, and I know a lot of it's not your fault, and a lot of it's due to illness and a lot of other things, But nothing here is set up to help you. Okay? A lot of people are going to lose their homes in that situation. Now, if we were in normal times and there was no COVID and you lost your job and you weren't able to pay, you would be in the same situation. So we're basically going back to the way it was. So understand that. This is a very limited amount of time, and these assistance programs are hooked into each other and they work in tandem with each other. But they're not set up to give you the house for free or to set up a situation where you're making minimal small payments and keeping the house. They are set up to put you back on track with making your normal mortgage payments. Now, do not attempt to try to game the system by saying that you cannot make your mortgage payments because you think you're going to get a $200 reduction, or you're looking at the interest rate and say, well, I'll get a lower interest rate. This is not a refinancing. Loan modifications are not refinancing. Loan modifications are an application for something that is given to people who cannot afford their homes. Okay, it's not a refinance. A refinance is something that deals with the equity, with your credit, with your income. This has nothing to do with those things. Okay, loan modifications deal with keeping the person in the home. Even if it's a bad business decision for the person to do a loan modification, it's still, the purpose of loan modification is that it's not to give you a better deal on your property. So be very careful when you have the big talk with the bank. And again, you have to talk to the bank, because if you don't talk to the bank, then the bank, what they'll do is they'll put you in a loan modification situation and they'll deny your lien even if you qualified for it. So don't be scared to talk to the bank. They're not going to do anything to you. You have to communicate with them. If you need assistance, there are people out there who can talk, who can help you. It's not necessary to hire anybody though, however. Do it yourself. Call the bank. Be proactive. Be on top of your case, because nobody's going to care more about your situation than you. My name is Diego Mendez. I'm a lawyer here in Miami. I've helped a lot of people with loan modifications, with bankruptcies, with foreclosures, and a lot of debt issues that people have. We're moving into a time where a lot of people have a lot of questions, and this type of confusing times creates confusion and creates bad results for people who are not on top of what they're doing. A lot of people, unfortunately, are going to lose their homes because they're unable to deal with this situation. That's very unfortunate. My show is called Debt Law Survival Guide for the Desperate Debtor. I'm here every Monday and Thursday with new episodes, and I'll focus in on different types of mortgages, loan modifications, forbearances, and the foreclosure issues that are coming up in the near future. Please subscribe and like my videos, and I'll keep making videos for you and for anybody who has this type of issue. Please comment, ask me questions. I'll try to answer what I can, and I'm here, like I said, every Monday and Thursday to help you. Thank you very much.